Hello, everyone, and welcome to the Property Trio. It is monthly market update day, and it's a day we're always looking forward to because we get to crunch the numbers and disseminate it and see what it actually means for you. And as always, my co-hosts Cate Bakos and David Johnston are here to unravel it. Thank you, guys. Morning.
Good to see you, Mike.
Good morning.
So we've got the January numbers in, and I thought I would take an approach that journalists took with the December numbers. Now, of course, December went backwards. So using that same metric, Darwin, second best capital city to purchase in Australia. It did 1.7 for the quarter and 0.6 for January, which was behind only Adelaide 0.3. So Darwin is the future, Y or N? Discuss.
It just goes to show why one data point doesn't necessarily make a trend line.
Yeah, look, with the core logic numbers that table they've been showing with how numbers have changed since COVID struck. And now they've added in an extra column of the past 10 years. I'm not sure if you two noticed that, but that's a great to just add that extra context over a longer period of time. But what I did notice is poor old Darwin is still in negative territory over the last 10 years. So, I'm not sure we can beat the Darwin chest too hard after 1 month of positive numbers.
So prices in Darwin were higher 10 years ago. Is that really true?
Yeah,
Yep,
that's
that's
exactly
right.
right, Mike.
That's crazy. That's not what I would call a hotspot. Although, everyone's kind of looking at mean reversion. So if there's any mean reversion that's a wave that we can ride, is how far is Darwin off from where it should be?
And we promised our listeners an episode on mean reversion, so I hope that statistician inside of you is making some notes and plotting something really exciting.
Even more exciting than that, Cate, I've commissioned a research project to look at Melbourne specifically, and if it was tracking to the mean, what should each suburb be valued at, and what is the percentage differential? And that has to be your birthday and Christmas.
Yeah, I love
That sounds pretty cool.
That's awesome.
So can you unpack that a little bit further? So if it was tracking towards the mean, from what date to current are you sort of working off?
Well, I haven't completely defined that, but there was obviously a point where it kind of broke away, and probably roughly about the time the land tax changes were legislated will work out to be roughly the time. So then we'll say, okay, well, if that median tracked the way that it had historically, what would the price point be, and how far is that from where we actually are? And of course, Melbourne is a big city. It's made up of a lot of different things. So wherever possible, I want to get that at a more granular level and look at the suburbs. So, the opportunity for an investor with that sort of stuff is to say, okay, well, let's say Melbourne CBD is 5% below where it should have been with the median, but Beaumaris, or is that how I used to pronounce it? Or Beaumaris,
yes.
That could be 12% under the median. So there's an opportunity to interrogate, well, why is that the case? And does that mean there's some built-in upside? Obviously there's no guarantees, but the thought experiment is, okay, well, let's take that lens and see where the opportunities might be.
Yeah. And then it's also like, are you tracking it against the historical mean growth rate of Melbourne, or relative to the mean growth rate of, say, Perth, Adelaide and Brisbane that have jumped ahead of Melbourne, relatively speaking? And if Melbourne was to catch up and get back into its historical position relative to those capital cities, where would it be? So there's so many different ways you can slice and dice when you do this sort of statistical analysis, isn't it?
We'll pick the one that tells the best story, I think, Dave.
So, the irony with Darwin is it's probably at its median or mean of 10 years ago. It's just stayed there for 10 years. So it's just 2.9% below. But obviously that's completely ignoring inflation over that period of time, let alone if it is expected or if you expect a capital city to outgrow inflation in terms of property growth rates, which, we know the Australian property market has done historically over over a long, long period of time.
Yes.
And you know what? If we had a look at Perth 3 years ago and contrasted it to the decade, yeah, Dave, you're nodding, you know exactly what I'm saying. Yeah, we would have seen a significant differential there, a negative differential as well. And as we all know, Perth's been playing catch up and it's had a colossal run, but it had a terrifying period of stagnation as well.
Some anecdotal information about Perth. We're obviously very, very active in Perth, inspecting properties for investors. It was the number one state for us for 2024. It is becoming quite quiet at the moment. So I picked Perth to outpace, I think, every other capital city for 2024. Had I had the information that we have, and it's only anecdotal information, I might have changed my estimate there. But anyway.
Yeah, look, I think I'd agree too, Mike. We just we stayed on board that bus slightly too long potentially. Because if you look at, there's a few things here. So, Brisbane and Perth have a clear and steady loss of momentum, especially the detached housing sector, where value growth has eased more noticeably in those two capital cities. Perth's now recording a slower rate of growth than Brisbane and Adelaide over the rolling quarter. So in the June quarter of 2024, growth in Perth home values was 7%. That's now eased back to 1% over the last quarter. And I'm just going to skip ahead here, but we're still talking on the capital city outcomes. But in terms of the house price expectation index, the second biggest change was in Western Australia, where it fell back 10% in terms of their expectations.
Wow.
There. So, even the locals are, really not expecting house prices to grow much moving forward.
So, Cate, getting back to the January figures, obviously we can see for the month nationally 0.0%, so fairly stagnant there. Dave has shared some insights about Perth from data and sentiment point of view, but were there any standouts for you?
Yeah, there are. So combined capitals were down 0.2%. So we can talk about Perth slowing, but let's talk about the elephant in the room. Melbourne and Sydney, they recorded negatives, as did Canberra. So Sydney minus 0.4 for the month, Melbourne minus 0.6, which is significant, and Canberra minus 0.5. I'll chat about how that is correlating with what I'm seeing on the ground very soon. But if I look at this data, the power of those three juggernauts, Brisbane, Adelaide, Perth, has not been strong enough to counteract the underperformance of Melbourne, Sydney, Canberra. And interestingly, the combined regionals are doing 0.4% positive for 1 month, which is great. I do want to shine a spotlight on January, probably being the most fickle month for us to capture and navigate. As we know, not a lot of transactions happen in January, particularly in capital cities. And we also know that listing volumes, I guess, are artificially impacted because agents take holidays deliberately. So I don't think it's a month that we can really take too seriously, which leads me to my next point. In Melbourne, I did come back to work early because the call from the jungle drums was strong. I had lots of inquiries, and I know, Dave, your business is experiencing the same thing. People are very keen to get back into property, and while there haven't been a lot of listings for buyers to enjoy, buyers are back and forth. Part of that is because people have a renewed sense of confidence around interest rate cuts, some of which are thinking will come next week, and we'll find out. So we're busy, and I've had some early auction activity. We had auctions scheduled and then brought forward. So I was bidding as early as mid-Jan. And I have to confess my auction success rate has dropped because my competition levels have increased. And I think buyers who have been in the market for 6 months are still having a hard time adjusting to that because they've been expecting bargains and low-hanging fruit in Melbourne. And that's not the case at the moment. Our clearance rate was pretty strong last weekend, and it does feel like there's been a noticeable shift. I'll call it, next month when we go through the data and I'm comparing what I've been experiencing, I'll be prepared to call it then. But the early stages are showing green shoots, and I'm certainly feeling it from a competition point of view. So, this is probably as bad a snapshot on a chart that I think we can anticipate for Melbourne. I think going forward it's going to get better, and I don't think I'm being Pollyanna about that.
Yeah, 0.6% for the month and down 2% for the quarter and down 3.3% annually. I'm hearing the same thing, that people are active, it's busy, sentiment is already on the up. It just hasn't found its way into the data. And I was going to ask you, which would be the month that you think that Melbourne finally cracks into a positive?
Well, we get a delay on our data reporting. If the agents are onto it and they report it, obviously it will be captured. But if it's reliant on Valuer General or the Titles Office registering sales results, if we then think about the average settlement period, which is somewhere between 60 and 90 days, I think that's the kind of lag that we can anticipate. So I'm going to say that we'll see an uptick in April, maybe as early as March. And the other point that I make is looking at median values, which again doesn't tell the whole story because of our blend of houses versus units. I'm still quite in shock at how low Melbourne's median value has dipped. We're at 772. We're not too far off that of Hobart at 658, and I never thought I'd see that. That's a crazy parity.
Yeah.
The third, is it the third cheapest median of all?
And remember that factors in all units and houses, and there are more units in Melbourne. But yeah, look, I mean, units, Melbourne is the third most expensive, but Perth and Adelaide are only $10,000 and $11,000 behind. So they feasibly could overtake the median price of units in Melbourne. And with houses, they're fourth. But 50,000 less than the Canberra median, 60,000 now less than the Brisbane median for houses, which seems quite hard to fathom, doesn't it?
It does. Yeah, Adelaide, it's just...
Adelaide's 872, Melbourne 917. That's only 45,000 difference for the median house value.
Yes.
Feels like something's got to give there, doesn't it?
It does indeed.
Feels like we need some reversion to mean. So stay tuned.
Well, look, anecdotally, we are feeling the same thing in terms of inquiries about buying property through our business as well. And that's feeding back to me from our property planners and brokers. And then also, I know I'm skipping ahead, but the biggest gain in terms of the consumer price sentiment index on house price expectations was Victoria, which surged 11%. But what is coming from a weaker starting point, but obviously the sentiment in Victoria is coming through in these surveys as well.
Interesting. Now, I want to talk about the top end of town, because if we look at the quartiles of low, medium and high values, there's an interesting story to Sydney and Melbourne. Cate, you drive a Range Rover. Talk to us about the top end of town.
Yeah, good on you. This is a really interesting chart because it segments the quartiles, as you've just said, and everything on that chart is looking pretty good except ACT, Sydney and Melbourne. And then when we have a look at ACT, they're very, very slight negatives for the lowest, the middle and the top quartile. But when we look at Sydney and Melbourne, we're looking at significant orange blocks for the 75th, so the top quartile. And it's that chunk of underperforming properties that is slowing down everything else. So it's obviously it's negating all of those capital cities that that have been doing really well across all quartiles, and it's really the top end of town in Sydney and Melbourne that's dragging everything down the hardest.
It's
I found that fascinating.
Even though we did have the highest sale property on record in history in Toorak, $150 million.
There you go, Sydney siders.
Yeah, we've still got them covered.
That is a lot of biscuits, isn't it?
But imagine
150 million.
Considering our top quartile is down the hardest, and we're the capital city that's down the lowest. Imagine what that property would be if mean reversion did take place. That's a big gamble if that's why they did it.
Yeah, that's a good point. And I wonder, like, that probably hasn't come through in these stats yet. So it itself might just change the numbers for next month.
One thing about those really, really highly priced properties in those prized locations, when they're so far outside of the bell curve, they're actually very hard to put a valuation on.
Yeah.
And I know quite a couple of advocates that work in that space, and it can be really tough. Valuers have a hard time putting a valuation on something because it's not as simple as just having a square meterage rate. There's that scarcity factor and that tiny pool of buyers that might be prepared to get emotional and fight each other.
It's interesting. I've observed that the top end of town has a wilder ride during the cycle, right? The swings seem much more violent. So in a downturn, the losses are big, and when the market is soaring, the gains are big. But it also sort of tends to almost happen first, like the top end gets hammered before everywhere else. But that narrative would say that Sydney and Melbourne are on the decline, but it doesn't feel that way.
Yeah, and look, what we know, which you've just sort of touched on, we've talked about a few times before, is the upper quartile tends to lead the change. So on the way down and on the way up. Now, this, we feel like it's getting towards an end of a cycle, but I guess because it's come so far down, it does give it that springboard to show big numbers when it turns.
Yeah.
And so therefore it'll look like it's changed significantly higher because, or relative to the other quartiles, because it's fallen further.
Yes. Yeah, that's a good point. Dave, I want to unpack this 10 years of data because you've referenced it a number of times in different shows, and I think the context has always sort of been, Perth is going through the roof, 19% growth in the calendar year, but when you extrapolate that over a 10-year period, it is not keeping pace with some of the markets that aren't getting anywhere near the publicity. So
it's a really good point, yeah. So, that longer-term perspective allows us to see that although Perth, it feels like it's flown, which it has over the last few years, astronomically, we stretch out to 10 years, its actual growth has been only 55% over 10 years. And that places it, out of our primary, seven capital cities, excluding Darwin, that's the second weakest growth over those 10 years. And the weakest growth is Melbourne. And if we look at the upper end, Adelaide's had the strongest growth over those 10 years now at 93.
Pete did pick that.
Go Pete.
Yeah.
I hope somewhere he's listening and he's got like a little cake in hand.
Oh, you'll
and
have a
he's giving
smile on his face.
little nod of the head.
Yeah.
Dave, when you chat about Perth, it's a perfect illustration of the difference between a trading mentality and a long-term investing mentality.
Yeah, exactly. A really good point. If we didn't
have stamp duty and sales costs, if brokerage was like pressing sell or buy on, an E-Trade account, we'd have a lot of rich people out there.
Yeah. So it does suggest there's still, more room for Perth to actually go up in the coming years, even though the data obviously currently at the moment and the sentiment suggests that people are certainly weaning off Perth. But, Melbourne's a salad dweller. And Darwin then is just a mile back, as we've already mentioned, hasn't it's actually below where it was at 10 years ago, whereas every other capital city, sort of Melbourne's the bottom at 47%, up to Adelaide 93%, or somewhere in between.
If we rewind 10 years ago, I think Darwin was in the grip of like an LNG boom, or at least there are a couple of very significant projects. But, you know, we don't tend to talk too much about Darwin, because if you don't want to buy in Perth because you're worried about the exposure to resources, then you'll hate Darwin because, you know, there's a CFO of a mining company whose stroke of a pen is more meaningful than any other data point.
We have promised to do an ep on Darwin, though.
Did we? Right.
Yeah.
Okay. I'll leave that to you guys. I mean, it is popular. Cate, one thing that stood out with me was the past 10 years' performance of the capitals versus regions.
You know, I have a soft spot for lots of special regions in Victoria, and this is combined regions all around the nation. And we're not chatting necessarily about, you know, Ballarats and Bendigos here. We've got some big regions. One of our biggest regions, which by its own right probably should be, you know, another capital city, is the Gold Coast. And we know what happened there, particularly through COVID. It was, you know, even more extreme. That kind of exacerbated its growth. But, you know, our regions have done really well with internal migration. Some of it stemmed from COVID, and some of it was, you know, already well on its way or coming from affordability. And I think we have to pay attention to that. You know, you're sitting in a fantastic and prosperous region yourself as we speak. And we've seen a lot of Sydney-siders and Melburnians, just to name a couple, and we'll see it with the other capital cities now that they've had strong gains. A lot of people are voting with their feet and moving regionally. So this regional 10-year performance is no surprise to me. Combined regions 86.4, combined capitals 65.7. Now, 86.4 is huge. If we then break it down and have a look at the states, the regions within the states that have been performing really strongly, the one that takes the cake is regional New South Wales. So again, Mike, I throw that back at you. Wollongong, Newcastle, Central Coast, that's a lot of movement. And I'm sure it's not just those. Obviously, you've got some wonderful...
Wagga and Dubbo and Tamworth, Orange, and all those places. Yeah, Orange.
Yeah, but I think internal migration speaks volumes, and people leaving the city, voting with their feet, looking at something more affordable, and also focusing on our federal and state government policy in relation to visas and job opportunities, and also where we're seeing a bit of spending, government spending, and you know, whether it's infrastructure, hospitals, schools, we're seeing employers established in some of these areas. So we can't overlook that, and I think it's a trend that will continue.
Yeah, and look, this wasn't lost on me, and I actually found a bit of data to back it up. So the Regional Australian Institute and Commonwealth Bank's Regional Migration Index, which measures the population flows to rural areas, is at a nearly 2-year high. And it's 80% above the pre-COVID average in terms of the number of people moving from our capital cities to our regions, for all those reasons you've mentioned there, Cate. And so what it's showing at the moment is that 35.6% more people are moving from capital cities to the regions than in the opposite direction.
Yeah.
Now, historically, we knew there used to be a bit more, you know, of a flow regions to capital cities, but that's actually flipped on its head, and by a significant margin, that 35.6% in terms of actual bodies, which, as I said, is 80% above what it used to average at prior to COVID. So, and then just in Sydney and Melbourne, they've lost around 2.5% of their younger residents. I didn't get what they measured their younger residents as, but let's say it's 19s to 30-somethings.
Yeah.
We make it 19 to 42, Dave?
Can we make it 19 to 50? So 2.5% from Sydney and Melbourne in particular have been lost to regions between 2019 and 2023. So, yeah, look, you know, it's certainly... Is that trend going to change? You know, is it getting hard? We know there's a bit of more of a crackdown on working back in the office.
Yeah,
the numbers are starting to show there's more people working in the city more days of the week in Melbourne and Sydney. But, certainly the last 4-5 years, people have been leaving our capital cities and going to the regions.
And interesting that it's younger
Record
people,
numbers.
because I wonder if that quality of life and living for their children is a key concern. I'm sure that's part of it. Also, they're willing to adapt to technology and set themselves up well and work efficiently with tech.
Yeah.
That's got to be part of it. What will be interesting is the next collection of that data to see if there's been a little bit of a slowdown or a spring back in relation to bosses calling us back into the office.
And as a young person, Cate, I agree with all your points. Let's move on to rents. I'm getting real desperate now. Rents. So good news, I suppose, in some respects with the moderation of rents. If you look at the graph for CoreLogic, the annual change in rents for houses, you look at, say, Perth, Melbourne, we could probably throw Adelaide into the mix there. Everything's really pretty much trending down across the board, but we're still talking 7.4% annual change in rents for Perth. Admittedly, a drop way back from double digits, but it's still too high, really, for people to manage.
More than half of them are now sitting between that target band for inflation. So, if rents were doing what they were meant to do, they'd just be sitting at CPI. In terms of not showing movement. But we've also got to factor in all of the gains that these locations have had on the capital growth figures. And as we know, rents broadly stay in touch with that rate of growth. So while they can be a bit like a DNA strand and trend downwards when growth is trending upwards, they'll broadly realign. So I anticipate that we'll continue to see some positive changes in rents, as in some positive growth figures, which is not positive for renters.
Yeah.
The ones that are still trending upwards seem to be Hobart, and Hobart's a funny little market, but you do get a lot of contracts and people working down there signing on in December, Jan, so that's not a great shock. And also Canberra looks like it's stabilised, but the others are kind of falling.
Yeah, and I think that chart that we're talking about here is a 12-month picture, and a lot of the, slowing down in rental growth happened in the last 6 months.
Yeah.
So if we're looking at maybe a 6-month trend or the more recent trend, they've really been tracking pretty slowly. And nationally, rents have only grown by 0.4% in the last 6 months, even though that is what was the growth for the month of January alone was 0.4. But we do know January tends to be an outlier with rents because a lot of rental properties change hands over this period. And if we take a macro view and sort of bring back to that 10-year perspective, the last 5 years we've seen growth in rents across Australia of 37%, but in the 5 years prior to that, combined was only 5%.
Yes. Yeah, we had a real underperformance. I remember Pete Kalizos saying, we're just catching up.
Yeah.
Frightening thought. I had an interesting thing that I noted this morning listening to the 6 a.m. ABC news, and the first headline that I've heard in a long, long time was about incentivising first home buyers and some of the political strategies to get first home buyer opportunity enhanced. We haven't heard that in a long time. And if you both think about how long it's been since in maybe the top 5 news headlines, the last time you heard something about rental affordability, for me it was a long time ago.
Yeah.
Well, it might have been the last election, right? Because that has to factor in, like housing will be a feature of the election.
Yeah, I would have said 6-12 months ago. We were hearing it every morning,
all the time,
and it wasn't about election. It was just it was always in the news.
It's definitely subsided, hasn't it? The last
most definitely
3 to 6 months, and so it should have because, as we just elucidated, rental growth has slowed down significantly over the back half of last year. But look, interesting again, the regional story. The last quarter regions, combined regional indexes increased by 1.6%, whereas the capital cities just by 0.3% over the last 3 months. So people are going to start coming back to the city because it's cheaper.
Yep.
Isn't that crazy? So I'm getting a few sort of conversations with investors at the moment where they're sort of talking about yield and their cash flow position. I remember when I first sort of started in property, you know, there were businesses that would help you find positively geared real estate, and then it sort of seemed funny years later because everything was positively geared. Now everything is negatively geared. We're talking about a national rental gross rental yield of 3.7%. That's pretty lean. I'm wondering, given that, yes, we might have 25, 50, 75 basis point cuts this year, it's not a huge, meaningful amount. We're still likely to be talking about all investors with a reasonable LVR being in a negative cash flow position. Are you guys hearing commentary or questions about, well, where can I go to get something that's going to be close to neutrally geared as possible?
Every day.
I thought as much.
Every single day. Do you know what, though, and this is the hard thing, we get a lot of prospective clients asking for strong capital growth and cash flow positive property. And you know,
it's the holy grail. It's all people have been asking that since the beginning of time.
Got a simple brief for you, Cate. I just want a property that has the maximum growth, but also the highest rent.
And positively geared from day one, don't forget that.
And no volatility. Because sometimes you can find that outperformer, but you have to be prepared for the volatility. You know, I'm sure that I'm having a look right now at gross rental yields, and Darwin and regional Northern Territory, they're off the chart. And I'm sure if you timed it right in history, you could get colossal growth as well. You can't be upset when you miss that, and then you're looking at the 10-year average, and you know, back to Dave's point 20 minutes ago. So to purchase a property with high growth, high yield, and no volatility, I think that's a very hard ask.
Which is why 10 years is a short-term investment in residential property.
Yes.
And so much of investing full stop, and particularly in property because it's a long game and a get-rich-slow scheme, is getting your mindset right and winning the mental game of not riding the ups and downs and fluctuations, and making sure you're able to hold and you don't sell too soon.
Darwin gross rental yield at 6.7%. It's over 2% higher than any other capital, and traditionally rental yields can be sort of a predictor of capital growth, or there can be a correlation between them. And you know, Darwin's 10-year, it's not only underperformed, it's gone backwards. You know, everything there kind of points to it can't really stay the way it is. I feel like in the next 24 months, it's probably going to do something interesting, but it's such a crystal ball market for me. It's not something that I'd be comfortable to touch. You know, maybe as my 101st acquisition, where I'd had enough built in to be able to ride the swings and roundabouts of it. But it's interesting, isn't it, to be so far out in front?
I think there's also the perspective, whether true or not, and I haven't dived into numbers, but look forward to when Cate does this, is the concern around, some of the social challenges in the Northern Territory. And I think that does play a part in putting investors off heading up there, and probably some owner-occupiers as well. And that will have played a part in, outside of other factors, in why prices have been so flat for a decade. And even though you're getting such a good rental yield, investors aren't flocking to Darwin yet, at least, whereas we certainly see that as a key price signal across the other capital cities for interstate buying, don't we?
We do. Look, it is a tough one because its distance is a challenge for investors, particularly if you need to renovate or organise maintenance, and also insurance-related concerns. Natural disasters,
cyclones, disasters.
Absolutely.
But look, we do know that distance, people have overcome that when it comes to Perth, and it is the most isolated capital city in the world. So
They have
people
the
can
best
overcome
state.
it.
They have the best state newspaper in Australia, I think. The NT News. They've just always valued comedy over, like, should we be more professional? I love that about the Northern Territory.
Isn't there,
That's,
like, someone keeps numbers on the number of days throughout the year? The front page has a crocodile on it.
yes. Yeah. And I think that's actually an internal thing at the NT News as well.
Yeah, so time to buy a dwelling at 18.4% for the year is sizable. But then when we zone in and have a look at some of these figures that have changed from month to month, family finances for the next 12 months, that was a marked increase as well. And the house price expectations index just for 1 month is up 6.5%. So it looks to me like there's a renewed sense of hope that we'll have an ease of rates and an expectation that will totally correlate with rising house prices.
It's interesting to contrast Feb 25 to Feb 23 as well. What was going on back in 2023 that had us so jazzed up about everything? Like, we're I know we're talking about it is a real marked turnaround from the previous month and the previous year, but 2 years ago, a very, very different story.
Yeah, we'd had our interest rate increases had been consecutive, and by that stage, we'd been getting them every month for half a year. But we had some capital cities that were absolutely flying, and a couple that had really come off. So 2023 was a real mixed bag. If you'd asked me about 2021, I would have had a different answer.
We had a war chest too, right? Because the household savings rate went through the roof during COVID, and by February 2023, we still hadn't had enough time to spend it. I think with the interest rate increases and things rolling off the fixed periods, that may have eaten into that to some degree. And we've also been somewhat busy going on holidays. Like Japan's the number one destination internationally for Australians. Part of that's got to do with the dollar. Cherry blossoms, that probably factors in. It's beautiful part of the world, I'm guessing. But yeah, very, very different world that we live in compared to right at the back of COVID, where, we sailed through that with a much better outcome than we might have anticipated at the beginning. I like to remind people of that. Like, the first month or two of COVID, we really had no idea what the world was going to look like. And there was a lot of fear, but people, I think, forget that.
Yeah, they definitely do. We live with that fishbowl memory quite a bit, don't we?
Yes.
And think about 1 to 3 months back. So it was interesting, is it, the house price expectations index jumping up again, and I assume that's correlated with the close to certainty of rate falls happening, and so the interest rate expectation index fell, from 105 to 90 because people are expecting rates to be lower. And you can sort of contrast that with the jump in the house price expectations. So people are expecting prices to start rising again off the back of interest rates falling.
Yeah.
I already shared that Victoria had the biggest surge in that space of 11%.
Yes, it all starts with the sentiment. Then we'll see, as I think Cate predicted, we're talking maybe March, but April is the month that you're saying we should see some positive numbers in that growth column. It'll be interesting to watch.
Yeah.
So we've done Westpac Melbourne. What about ANZ Roy Morgan? They have their own show when it comes to
I was a bit impressed with
confidence.
this, and they broadly correlated, which was cool. What I loved about the ANZ Roy Morgan chart, and we'll pop this in the show notes. We've got one that shows consumer confidence and on a fantastic chart or a graph, and it shows where some of the not so great events occurred and how that impacted consumer confidence. So from bushfires to lockdowns, national lockdowns, Victorian lockdowns, Delta lockdowns. Really interesting to see that. And then if we look a little further, there's another chart that shows the consumer sentiment data based on people who own their own home, people who are paying off their home, and those who are renting. And there's subtle differences there too. So the uptick that we've seen of late is people who own their own home, and they're heads and shoulders above those who are paying off their home and renting. So really interesting. That talks about having
no
money
debt,
at your fingertips.
Earning higher rates on your savings, your term deposits,
yeah,
your bonds.
So we'll pop those ones in. I thought they were pretty interesting.
Yes.
What's also a takeaway is just how low sentiment has been for 2.5 years, really. Even though we've come out of COVID, there's been this real lag of low sentiment relative to history. So if we look at sort of 2014 to until COVID hit, sentiment was generally above 110, and there it is on the screen as Mike holds it up. If you're on YouTube,
you're winning.
And so that orange dotted line is 110, and we now sit sort of around 85, which it's sort of sat at these sort of levels since about 2022, and obviously that people just haven't felt as great about things since we've been locked in our homes for periods of time during COVID, the fear that comes with a global pandemic, and then obviously the rapid rise in interest rates, I'd say, have probably been the three big factors. So hopefully, we're starting to come out the other side of that, and that could be really good for the economy.
Yeah.
We've still got a couple of wars in the mix as well, and now we have a big orange president over there in the States. So interesting to see some of the stuff that he's coming out with that's having a real influence on markets, like the steel tariffs that previously Australia had an exemption for, is back on the agenda, and we don't have a current exemption. And I believe Albo's probably on the phone right now trying to negotiate that position. But the world, it seems,
he met with Trump yesterday, or had a 40-minute conversation with Trump yesterday.
There you go. About
the steel and aluminium tariffs that we would be sucked into or caught up in, but in that web. But as he pointed out, I believe, from what I've read, I think we're one of only 3 or 4 nations that has a trade surplus with the US. So we actually bring more of their goods into our country than they do of ours into theirs. So that's
interesting.
Very interesting space to watch. And dare I say it, it will be interesting to see how property investors look at this information and make decisions about where they're investing. And I do wonder what sort of impact this will have on sentiment for WA in particular, particularly given that it's been going so strongly. And obviously a lot of people will be watching closely to see if the tariff arrangement can be reversed and what our government can sort out with the US.
We've got exposure in South Australia with the Whyalla Steelworks as well, which I heard this morning is in some financial duress. So that'll be interesting to watch. Yeah. We don't have any listings or lending data to hand because, unfortunately, they haven't been released as yet. We do have an update on unemployment, which is staying very, very tight. 4% unemployment rate is it's traditionally very, very tight position, and some economists would argue it's actually a little bit too tight because it feeds into labour capacity. Dave, what's your read on that?
Yeah, well, I guess it's one of the key factors why people aren't expecting us to have too many interest rate falls, because unemployment is so low, and why, therefore, a lot of economists and ourselves think there'll only be in the range of 2 to 4 rate reductions this year. So, it's a good thing, but it probably isn't helping our productivity grow, and really productivity is the key driver of increases in our standard of living, and that's the productivity numbers are still quite low. And on the measurement of productivity, the last set of numbers that came out had us at 99, whereas, for example, in 2022, we're up at around 105. So you really need your productivity to be going up year on year. And that's what it's done for a number of decades, which is the main reason why our standard of living's been so strong. But we've actually gone backwards in the last 3 years. Really low unemployment can have an impact on our productivity.
And the productivity, I think, Commission's report said that we're meeting 5 of the 39 metrics. Don't quote me on that. It was discussed in parliamentary question time the other day. So lots of work to do for Australia there.
Yeah, it's really the area you'd love the two major parties to be focusing in on as we lead into an election in May, if not sooner.
You guys excited in the lead up to the election, or does it get a little bit sort of tiresome that they're sort of trotting out the same sorts of material?
I like it.
It's always fun, yeah.
Yeah, I find it really interesting.
Yeah.
It's interesting that I haven't seen much from Albo, but Peter Dutton's sort of, you can tell a lot of the media and a lot of the sort of marketing is about trying to convince us that he's a human being to some degree, because I think he's got a bit of a reputation as quite a robotic character, but it talks about, his life as a police officer and the work that he's done and, his involvement with the community. You can see the Liberal Party are really leaning into the man rather than necessarily the policies and the economics. I'm wondering what the Labor Party will be focusing on.
Well, they're focusing on not having a detailed position on some of their policies and not having them fully costed, which we're going to probably see some pretty bad behaviour between each of our political parties over the next few months. My favourite character through all of this is Anthony Green.
Yeah, right. Yeah, it'll be interesting to see what comes out there. One thing that I noticed that characterised the Shorten Labor government that I thought was actually really, really positive is that normally what happens in politics is the party in power will sort of say, here's what we've come up with, and then the opposition will go, well, that's crap for these reasons. However, Shorten went off on his own script and said, these are our policies, way in advance of the actual Liberal government that was in power at the time. And I thought that was good for Australian politics, right? It was very, very bold, but why not, instead of just being a naysayer on their policies, to say, well, okay, well, sure, they're going to issue their policies, but we're doing our own work here, and here's what we think is right. Now, Shorten obviously died and fell on his sword with the tax changes and negative gearing and those sorts of things, but much of that I thought was good for the nation.
And I think it is, but unfortunately he lost what some say was the unlosable election, so now it's gone completely other direction, and the coalition are copping a bit of stick in the media for not coming up with any policies and really almost trying to go to the election without any announcements or very few announcements on policies, so they can't get whacked about their policies. And then, it's not what you want leading into election. We'll say nothing, and then if we get elected, we'll come up with whatever we choose, and there's no mandate. The people who voted for them haven't necessarily been aware of what they're voting for them to put into place and legislate during their reign. So, yeah.
Their strategists might be keeping their powder dry. If we haven't got a date yet, I know we're getting closer to the month in question, but their strategists might just be holding back and, as you said, Mike, working on the personality and likability angle.
Yeah, and there's something to be said for coming up with a policy so close to the election date that it's really hard to respond to with a counter sort of argument. So maybe there'll be some stuff at the buzzer. But anyway, it'll be interesting to watch. So before we finish the show, that was the month it was for January 2025. Were there any other standouts that you guys observed in the data, or anything we should be focused in on as investors?
Yeah, I think so.
Good. Well, over to you.
By the time this airs, will have had a rate decision, or very close to getting a rate decision. And that is an interesting one. And I hung my hat on it with our predictions, saying that we would have a rate cut in Feb, and I maintain that. But it's not a guarantee by any measure. And there's a lot going on globally. But I did pop in the rate tracker chart
Oh,
for
lovely.
a bit of interesting conversation. And that's been sitting comfortably at 95% since the updated inflation data came out early last week.
That's big. I mean,
It is big. It's huge.
That's a big majority, isn't it?
Yeah, huge majority.
What do you both think?
Oh, look, at 95%, you think it's very likely it's going to happen. So you've got to follow, I think, those numbers. They're so close to 100. But if it doesn't happen in Feb, then you would expect it will at the early April meeting. So I think it's just sort of a matter of time at the end of the day. So, I mean, we talk about 10 years being a short-term investment cycle for a property buyer. So, you shouldn't be, I wouldn't say to any property buyers, you should be holding off, until the next rate fall. If you're looking to buy over and considering it, factor in a couple rate reductions into your decision making. Yeah. Don't wait until it's official before starting to make decisions.
That's a good point. I'll take that as a gold nugget, Dave, actually. The smart money says it's going to cut, but I actually think we might get a little bit of surprise. I think the sentiment coming from Miss Bullock is the fear of the damage that inflation causes. So we might get a little bit of surprise, but the smart money says a cut. But I'm just gonna throw it out there and fly close to the sun and say it won't happen, Feb.
Okay.
Have the contrarian opinion.
I love it.
And I'll sweep it under the rug if it happens, and if it doesn't, I'll rehash this and I'll put it all over socials like a genius.
Well,
that's how it works, right?
That's how it works. A little bit of inflation. The final inflation figures came out since our last market update. So the annual trimmed mean inflation was 2.7% in December, and the CBA observed that the headline inflation fell to 2.4% in the December quarter, which was the lowest since March 2021. So, it got well and truly into that the RBA's target range between 2 and 3% in that last quarter. So that is one of the reasons why it's consistently at 95%, and a lot of the economists decided to change their opinion that there'd be a rate reduction at the next meeting.
Yeah.
The smart money wouldn't bet against it, but I've never identified as smart, I guess. All right, well, that was January, and as Cate said in the beginning, January is a tricky month. You shouldn't set your watch to it, and 1 month doesn't make a trend line. So, of course, we're not advocating Darwin, despite the opening monologue. But it'd be very interesting to see how those trends pan out, and those three markets that were galloping away are definitely past their peak and softening. So there's a lot to observe in 2025. But the good news is that Dave, Cate, and myself will be here to hold your hand and guide you through it. Thanks, guys.
Great to see you. Love
Thanks, Mike.
the finale.
See you next week.
See you next week.
See you later.